When I'm doing research on nonprofits, there are 7 key questions that need to be asked. 3 of them are answered on the first page. First is who is the organization? There's an address label, there's a phone number, and there's also a website and a description just to make sure that you're looking at the right organization so you know who it is that you're talking with. The second one we're going to ask is how big are they? And there's a couple of good ways to do that. My favorite is to look at individuals employed and also volunteers. That gives us a sense of size. You can compare them to different organizations. In the same way, you can look at the revenue numbers, expenses, and fund balances to get a sense of scale. And then the third question is, are they financially healthy? And so we're going to look left to right, identifying where there's growth, trending in the right direction. And as a quick check, I encourage you to download the last 3 years so you can see trends. What you're also seeing is that on every line there's a reference. And the parts are nearly the same as pages. They'll at least help you get to the right part of the document. So my fourth question then is, so what do they really do? And this page provides some good insights. It also references Schedule O, which is a form we'll see later in the document. These 2 questions are important. If you see yes answers, there'll be additional information in Schedule O about significant changes to their programs or what's been happening. If you don't, that's what you're supposed to see. So this is true kind of throughout the form as you're hoping for no's, but if you see yeses, that it's something that you need to investigate further. They provide a detailed description of their programs along with associated expenses and potentially revenue, if in fact there is some. The next few pages continue with this checklist approach. This is showing additional required schedules that are needed. And a good example of that is if you look down here on questions 17 and 18 dealing with do they have $15,000 in fundraising expenses or $15,000 in income associated with a fundraising event. So in this case, they had an event but no fundraiser. And what this would be doing is referring them to a different line item and section. And what this is doing is helping to start the answer to the 5th question that I have, which is how do they raise money? So we know there are events in this case, but not fundraisers. We can also look to Section 5 on page 5 to be looking at the other IRS tax compliance kinds of documents. So this is important because it makes it really hard to hide information since there's so much cross-referencing going on. 31 related again to the number of employees, and it shows that yes, they did have withholdings for them. If we look to page 6, this is dealing with governance questions. Examples are, are you aware of a significant diversion of the organization's assets? That's the kind of answer you really don't want to have to say yes to. Whereas in the B section, it flips, and what we're doing here is you really do want to say yes because this is about, do you have a whistleblower policy and a retention destruction policy? Do you have policies related to the way you do operations? Very important and helpful for organizations to think about, which gets us then to section 7 on page 7, and this is answering the question: are they professionally managed? Good information you can read here that talks about it. Then for each director, the question is whether or not they have compensation. On the second page, we're talking about directors. They have a single employee, the executive director, working 40 hours a week, making $100,000. And if you go to the bottom of this section, what you're finding is that they do just have one employee making more than $100,000. These check boxes are worth watching for because they deal with former employees, with highly compensated employees, and with employees or where there are there's accrued compensation. In other words, you owe somebody some money for something you've been doing, and it's important that that be disclosed. In the same way, independent contractors that made more than $100,000 for the year also need to be disclosed, because what that's doing is showing people who were nearly employees or other services that were provided that were worth documenting. Part 8 on page 9 is the statement of revenue, and this is about kind of helpful categorizations. It shows you a bit about how the organization shows their revenue streams. For this organization, they have government grants that were interesting. They also have additional services revenue in addition to their grants, and all this becomes totaled, but it again gives you a sense of comparison as to what they consider to be important. When we look at the functional expenses, this answers the 7th question for me, which is about how do they spend their money. And each line item is further segmented by programs, by overhead and fundraising. So it's definitely worth a review. You'll see this is the same number that came from Form Part 7, additional employee information and fees for non-employees, again related to some of this contractor work that we saw above. And then this other line item here, other expenses on line 24, shows you just what they think is worth categorizing. So definitely relevant as well. And then if we look at the balance sheet, we're actually going back to question 3, which is about are they healthy? And so this is kind of revisit of that. Shows a little more detail. And what it also shows in a nonprofit organization, there's something here called permanently restricted assets. You can think of that as being endowments. So the idea is if somebody started the year without much or it increased substantially, then what that would mean is that additional revenue was recognized during the year, but unfortunately it's not money available for them to spend. So it could be relevant when you're doing risk assessments, because you're assuming that they have revenue that they didn't actually capture. If we look to page 12, this is more of a summary page. I do think there are some of the additional statements that are helpful. If we go to, and actually page 13 is Schedule A, the next page, for page 14 of that, which is really the part 2 of the Schedule A. What this is doing is actually going back to our question 5, which is how do they raise funds? And this is kind of a part 2 of that as well, because we're looking at a 5-year trend, oldest to most recent years, showing how their money has come in. And then if we actually look out, there's an additional schedule, so it's worth kind of working through their schedules to see what all they're showing. They do show contributors, which is helpful, because this does show, there are some municipalities that were making contributions. How does that show up? It's probably worth some questions to understand that as well. And then we had also talked about the idea that there's a Schedule O. It's always worth going out to see what additional information is going to show up here. Would also comment on the date, because initially the returns are due 5 months after the year end. But you can file for a 90-day extension. You can actually do that twice. Turns out there's more extensions out there than actually filings made, just because it's such a common occurrence. But that just means it adds an additional 6 months or nearly a year just to file. So if your year end is June, you'll be using the prior year form and extensions, and then GuideStar uses an outside service to digitize the PDFs, and that's going to take a couple of more months from the time that the IRS even makes it available, which is again a couple of months delay. So you could be looking at additional 5 months. So the form could easily be 2 calendar years old. So know that if you need current information, you can certainly get it talking to the organization directly, because they are legally required to share when requested. But let us know if you have questions, and we'll do our best to cover them in future videos. Thanks.